This is the MTPredictor weekly market update for July 21st. So I want to do something a little different this week. I'm going to give you a little tour of version 7.5, our latest version of our standalone product. We'll get into the bigger picture analysis here in just a minute. As you know, we had the succession of Fed meetings and minutes and all that over the last few weeks. We're in the earnings season here, so we've gotten a lot of movement. We had an options expiration, so all that impacting and kind of hitting the market. And the Fed initially talking about tapering, and then kind of taking that back and saying, no, we can't do anything until we see improvement. In the jobs picture and some of the other things that it's looking at. And so the reality is now we're out to the September Fed meeting, where they will supposedly make a determination whether or not tapering will even be able to take place. Until then, there's no stop to QE asset purchases until further, or out into the future. Who knows how long at this point. All right, so that's kind of the landscape that we're in. But here's version 7.5 of our MTPredictor standalone version. This version connects two data feeds, either eSignal, IQ feed, Zenfire broker feed, FXCM, Rhythmic, another broker feed, bar chart, and then any ASCII or Metastock end of day format. So you can run obviously multiple charts, workspaces you can create, but I'll show you a few things here. When you download the software under the accounts manager here, this is where you will tell the software, depending on what markets you're trading, the size of your account, and then how much you want to risk per trade. So for example, in futures or Forex, we recommend not risking more than 2% on any one trade of your risk capital. So this is set to 2% of $20,000. If you do trade Forex, just tell the software what types of lots you trade, whether it's the minis, the micros, the standard lots. And that will allow the software then to size the position for you automatically. You have the ability to create multiple scanners. You see on the right-hand side, I've got multiple scanners here. There's Forex, some of the 24-hour charts I'm looking at, the commodities that I look at. The E-minis here, the Dow 30. So you can create multiple scanners. For example, if we look at the my 24-hour charts here, here's an example of, here's the E-minis on the weekly time frame, which we'll take a look at. This gives me a lot of information, a good snapshot of information. If there's any automatic trade setups that the software finds, any of those ABC corrective patterns, or potential market tops like your DP, those will pop up here in real time, and you can get email alerts or audio alerts as well. But the nice thing here is you can see it gives me a snapshot of what pattern is currently on that chart in terms of Elliott waves. So we can see our S&P, our Dow, our NASDAQ, and our Russell all in wave 5 up. So I can get a snapshot without even looking at the chart. I know these markets are heading into potential tops before we get a potential correction. All right, so if I want to look at one of those charts, I can just right-click, go to New Chart, and it'll pull that chart. And I happen to have this ES chart up already. And again, you can move these charts. I can move this chart and put it on another monitor if I wish. And if I want to redock it, I can just tell it to redock, and it'll come back into the initial position here. I can have these tabbed. There's our chart of Apple, Euro, Google, which we'll take a look at there. You can see I've already got the analysis on. And you can create your own workspaces at the bottom here. If this happens to be on my default workspace. If I wanted to create another workspace that houses different scanners and different charts, I can do that as well. All the drawing tools on the left-hand column here, and the tools that we use to do the analysis are on the toolbar here on the left. And also, if I right-click, Many of those same tools are on a right-click drop-downs, whatever's easiest to get to. One of the things, let me pull up a short, smaller time frame. Let's look at the Dow on the 3-minute time frame here. One of the nice things now we can do, if I go to the HLC button here, will show the high, low, and close. And if I want to show the gaps each day, I'm just going to go to the session breaks, and you can see this. Each session break is recorded at the end of each trading day here, and then at the open, I get the message. It tells me what the gap was. So, for instance, a little message here says an inside gap down. So that tells me that the tendency is that this gap should fill, which it did, back to the previous day's close, which is the yellow line here. So it gives us a lot of information on the intraday stuff as well, which is nice. And also now, if we go back to the high-low close here, actually let me look at the settings. The other nice feature now that Steve has put in there is the ATR. So all I need to do is click this Get ATR. It recalculates the ATR each day for me, and it will then put those on the chart. And the ATR, I can choose whatever colors. This is going to be in purple, it looks like. And I'll make these lines a little thicker. And click OK. And you can see the let's see if it goes back and gives me the previous days ATR. No, it must be for the current day. So this was the prior days. It looks like ATR there, and the current day's ATR will recalculate itself each day based on the when you ask it for the calculation, it'll plot those lines on your chart automatically. So it's another nice feature. It gives you that playing area for your market that you're looking at, and comes in handy. Okay, let's take a look at some of these markets here. Again, we'll start with the S&P on the weekly chart here, because obviously we knew that we were in wave 4 coming into the 4th of July holiday. We anticipated that we would get a turn in the trend back to the upside heading into wave 5. And again, we knew based on the tools and the software here that we'd have our wave 5 target there right around 1700 in the S&P. And you can see we're getting within a day's worth of trading, basically, the S&P reaching that target. And we'll pay attention to this level. Again, it's a significant level, as it has been over the last few years. If we go back, let's scrunch this all up again. Here was the previous all-time high back in 2007. I'm going to take a decision point off of that level because it's a significant area, and I'm going to move this over here, and you can see how that comes into play here as the S&P achieves, or if it does achieve, that $1,700 level. It's a nice round number, number 1, but you've got overlapping resistance. Now the weekly decision point resistance here is a very large, obviously, area. Goes all the way up to around 1830, 1835, and that's a lot of room. But in between here, we've got our minimum wave 5 and typical wave 5, which we want to watch. The tendency has been if the minimum wave 5 holds as support, then we get a correction back to the wave 4 DP here, which we can have on our chart already. We know the level. If this holds as resistance here, we anticipate a correction back here around a 1538 level. Begins that wave 4 decision point. And that's the nice thing about the tools that the software provides, is you can have these levels on your chart ahead of time before the market gets there, so they're leading indicators, if you will, rather than lagging indicators. So that's that confluence of resistance up there the S&P is working its way towards. As we are in earnings season here. Again, we'll see if we get that. If we do reach typical wave 5, which we did last time, if we check the wave pattern back here, we saw that this achieved typical wave 5 resistance or target, and the correction, although it did correct in that area as anticipated, not all the way back to the wave 4 DP, which would have been this level. Didn't quite make it back there. All right, if we look at this one, put the Elliott wave on here, again another 5-wave pattern that was in minimum, didn't reach typical, and the correction was all the way back to the wave 4 DP, and actually a little more beyond that. This one, again, a nice 5-wave pattern in a minimum wave 5 resistance with the correction nicely back to the wave 4 DP here. So that's why I just want to watch this. These 5-wave patterns have been very good because once they've achieved that wave 5, we've gotten corrections, whether it be in the minimum or typical wave 5, we've gotten corrections, so they're definitely worth paying attention to. And then this is overlapping resistance with our weekly decision point there. So we do want to watch this area. We can correct here as soon as we hit that 1700, or we can be heading to 1800, which is your typical wave 5. We'll see. Maybe when we look at silver here, I'm just going to pop over to silver because here was that 5-wave pattern up into the $50 challenge of $50 level there. That was a wave 5 high. We corrected again back to the wave 4 DP. That's where we are now. And since the Fed has said, well, now we've got to wait to September to see whether or not we're going to be able to do any of this tapering, and so that's kind of in flux, and therefore I think silver and gold as well will be kind of in flux. We're due for a bounce. If we look at the daily chart here, remember we had wave 4 here, and we fell off into wave 5. Okay, that was all what we anticipated. It did unfold as anticipated, and then after wave 5 again we would anticipate that correction back to the wave 4 DP on the daily chart here. That's this level here. All right, we haven't got much. We've got a little movement off of that, not much. Still having trouble getting back above the $20 level. If it does, then maybe they make a run for that $25, $26 level here. But the other option is, like I said, we may end up kind of going sideways. Really, very similar to what we've got in Apple here. We'll look at until the Fed kind of gives more clarification in September, and I think that's where we'll get a little more definitive answer as to whether or not tapering is going to be possible anytime in the near future. But personally, I don't see them being able to taper with the job situation and the other targets that they're looking at. I just don't think they're going to be achievable. And the Fed is going to have to continue this QE and asset purchases and everything else. Now we did see after QE1 stopped, and things began to kind of deteriorate. So QE2 is initiated, and they stopped that, and then things deteriorated again, and then they had to start. So those things are possible, but ultimately I think they're going to just have to continue this whole QE process with the asset purchasing and controlling interest rates, controlling the dollar. It's very important that the world does not lose faith in the dollar, and so gold is a competing currency, and so you see this movement of gold over from the west to the east. China, India, these are the BRIC countries really loading up on gold, record amounts. Even India and silver now, as the government is trying to discourage the import of gold to the citizens. But this is this huge migration, and what that means when central banks really start loading up on gold like that is they're losing faith in the the world's dominant currency, which is the dollar, the reserve currency of the world, and they're looking for other ways to diversify out of that. And the bilateral trade, for instance, between China and Iran, now in different currencies. So that is all happening, and that's why everything is so precarious, and it will continue to be that way as we see the shift from the west of gold reserves to the east. We have more gold here in the U.S. in terms of tons than anywhere else in the world. But when you actually compare, the size of our economy, Russia has much less gold, but they have enough gold basically based on the size of their economy, which is probably an eighth of the size of ours. So anyway, here's Apple, and just as we were looking at silver, Apple went wave 5 up on the weekly chart. We've seen this, corrected back to the wave 4 DP, and again we watched this level because if this level holds as support, we would anticipate the trend, which was up, would continue up. Well, Apple broke down below this level, and the danger is we talked about, again, this is the same true for any of the analysis in any of the markets in any time frame that we look at. After this 5-wave pattern up, if the wave 4 DP gives way, breaks down, we find wave 1, we go back to the bottom of wave 1, or the start of wave 1, we take our decision point tool, and that gives us this level here as the next potential target, which would start around $260 in Apple, which essentially we talked about from here would cut the price in half from the DP there. It's been struggling to get back above 450. It really needs to get back above 500, back above this level. So we've gotten a period of kind of consolidation here, and this is something that we may see in gold and silver, is because if we go back to the weekly chart here of silver, here's the wave 4 DP, similar to Apple. Hasn't really broken down yet. In fact, we've gotten closes back to the bottom of that support area, but there is strength on the STF here to the downside, and so we may just kind of maybe correct back to the wave 4 DP on the daily chart, which again would put us around that $25 level in silver. And then, but really maybe just kind of consolidate around, just as we've seen Apple doing down here. Again, we looked at the if the wave 4 DP does give way, we're looking at that $10-11 level here in silver. And then we also looked at the, in terms of just technical analysis, that triangle pattern we had. I didn't quite get that on there right. All right, that kind of descending triangle. That broke down, and then that's a measured move from the widest part of the triangle as far as a target. And so we looked at that would put us down around, if I can get that on there, right around $2.80. Didn't quite get that straight, but that would be the the measured move anyway. So do I think it's going to get down there? No. I mean, a lot of things would have to happen for that to happen. There's all sorts of ramifications. Now, the paper, we're talking about the paper price here, and that would be certainly different from the actual price of the actual physical bullion that you could purchase. So, but I throw it out there just because that's the analysis off of that particular pattern there. Kind of jumping around, but let's look at the euro. Again, the euro was on a weekly sell signal, and it's rallied a bit here as the dollar has weakened up with the talk of the taper, and then no, it's back to full-blown QE. And let's see if I've got my dollar index here. So the dollar has fallen off a bit from in terms of the weekly chart here. Again, this was that major low that picked the bottom there, and it achieved the first target around that 82.73, and just come into just shy of this decision point, weekly next decision point resistance level there, but has fallen off. Your next support here will be the DP here, which is right around that $80 level. And then finally, I've run over a bit, but here is Google on the weekly chart. Again, very similar to the markets. It's in wave 5. It's actually achieved typical wave 5. They've released their earnings, and I guess the market didn't like the earnings there. So again, correction after the wave 5. We could see back to the wave 4 DP here, which would put it's again in terms of the weekly chart around 700 and what is that, 740 on that 740 level. Just take a peek at the daily chart here and see where the next, here's that sell-off here. Don't look like we have any clear pattern there, but your next decision point support in terms of the daily chart will be right around 855. So we'll keep an eye on that. We'll keep an eye on that one, along with Apple, two big components of the NASDAQ there. All right, so we'll leave it there, and we'll be back. Actually, I'll be off next week, I think. I'm going to be heading down South Florida to Keys, and so taking a little time off before the end of the summer. We might not do the weekly market update. I've got to check my schedule and see, but maybe off next week. So probably see you in a couple weeks. All right, have a good rest of your trading week.